Hey, what's going on, everyone? Welcome to Froggy Stocks. Nothing to say. It's financial advice, entertainment purposes only. Welcome back. Happy Saturday. Is today Saturday or Friday? Let's see. Saturday. Awesome. Cheers. So everybody's talking about tech bubble burst. Well, it is bursting, and it's bursting because corporations are now realizing that the ad revenue system on some of these old platforms like Facebook are garbage. One, they're loaded with tons of fake accounts, so you don't really know as a company if you're actually paying for a real person to see your ad. So companies are starting to pull back and go, yeah, I'm not going to pay Facebook all this ad revenue every year if we're just advertising to bots. So I called this a long time ago, and I hate myself for it at the same time, but I said, made a short position on Facebook. Their behavior is appalling, not like Facebook for years, and now the whistleblower has damning evidence against them to testify in Congress. Guess who's holding is Facebook? Citadel. Like, one of the top holdings for Citadel was Facebook. They got rid of it. Right when they got rid of it, they gave Melvin, who was struggling, $2.5 billion, who then Gabe Plotkin decided to go long on Facebook and then got crushed, and Citadel shorted it. So corrupt. But I took out a short position back on October 4th of 2021, and I was going to keep it, and I was very, very adamant about doing so, right? Look at where Facebook was back in 2021. I mean, look at this. 2021, October 10, right there. Facebook was at like 351. Do you want to know who talked me out of taking my Facebook short? It was Jim Cramer's analyst in a freaking space call. It's absolutely insane that I closed that short. I was so mad at myself. I'm still mad at myself to this day. If I would have held that open and stayed consistent with my gut feeling and not listened to these FUD spreaders who were in the space call, it was Jim Cramer's analyst who came in and said, oh, you're going to get crushed on Facebook, man. You're going to get crushed on Facebook. I would have made the best trade of my life if I would have stayed short on Facebook, which I absolutely hate as a company. I think it's a disaster. So either way, that's just my little thing about how far back we called the tech bubble. My buddy Jay Brett, when we were doing space calls with Jay Brett, Mark, Tara, all them, we talked about this nonstop. I still think he's in Facebook short. I'm not 100% sure, but if he is, congratulations to him, because that's a hell of a play. Now moving on, I have a little theory. Oh, so the tech bubble is very important. Let me explain why. The tech bubble crashing is huge because a lot of people who are short AMC, GameStop, Mullen, BBIG, all them stocks, a lot of people who are short those are long tech. So now they're taking these massive hits on tech, so their long positions are coming down, but their shorts are not going down any further. So they're in trouble. That causes a liquidity issue, which can cause margin calls. So it's very good for us. All right. Now, my little thing on APE, I thought through this last night. Every time we get new information, I read it. We got a new filing last night. Let me pull it up for you so I don't say the filing type. Sometimes I do that. They filed a securities registration for the employee benefit plan, right? And everybody was freaking out about it, thinking that they sold 7.5 million shares, etc. They didn't. What happened was, let me bring it up in my tweet. They reserved the 7.5 million shares. Where is my tweet? The board of directors right here. The board of directors of the registrant approved an amendment to the plan to reserve 7.306354 AMC preferred equity units that may be issued under the plan in the AMC S8. It doesn't mean they sold at 278. It's just where they bring it out during the offering at the price it would have been, but they've reserved those shares for the employee benefit plan, so they haven't sold. So me and a couple other people, I got you, JP, I got you right now. Me and a couple other people think Adam Aron may not have sold shares yet, which would make a lot of sense because right off the bat, we ran to $10. Then we had 43 million failure to delivers, which doesn't make any sense. If Adam Aron was selling APE, why would there be FTDs? That makes no sense at all, unless it was a trap. Adam Aron knew market makers were going to sell synthetic APE, phantom shares on the market the day it started trading. So what he did and why they worded the share offering the way they did in the prospectus, saying, yes, it's at the market, but we're going to be doing it through negotiated prices at bona fide offers brokered through City Global that has to be approved by AMC and then released from ComputerShare. Now everybody says, why can't ComputerShare sell APE? I got the answer. AMC purposely made ComputerShare not able to sell APE because they didn't want APE shares being sold to the open market at current market prices. Right now, there's no way to buy APE on the open market that's from the share offering. New shares, there's no way to buy it. You're just buying shares that are in the market, or you're buying synthetics. You have to go to City Global and file to purchase shares at an offer price that Adam Aaron can accept or reject. If they would have let ComputerShare just sell shares willy-nilly, guess what? Institutions could have went in and bought everything at $1.40. That's where Adam Aaron trapped them. Institutions didn't read the filing correctly, and a lot of shorts argued with me that it was just an at-the-market offering, and it's not. It's at the market, but you still have to go through Citigroup and negotiate the price you want to buy them at. So if Adam Aaron is not selling any APE, if he has not sold any APE, that means, and we have proof, that market makers sold 43 million phantom shares into the market between August 22nd and 24th. And I will be damned if Adam Aaron has not gone and filed some type of litigation or some type of complaint with the NYSE, as he said he was going to do. Basically, he caught them red-handed. If he did not sell any APE from the offering, because he said no to any deals that came in unless they were like miraculous, like, hey, we'll give you $15 a share, then how did 43 million FTDs get generated? They only get generated when market makers go, oh, okay, hey, APE's going to run to 10, $15. We don't want it to squeeze. Let's just sell a bunch of APE to brokers like Robinhood, give people fake shares, and then we'll knock the stock price down by doing so, diluting the stock price, and then we'll go in and we'll buy APE at $1.50 at the market. But then when they realized, oh, we can't buy APE at the market, we have to buy it directly through City Global, and Adam Aaron goes, hey, guess what? I'm not selling you anything for under $10 a share. Now, those market makers are stuck, red-handed, caught, selling synthetic shares into the open market. And I have a full tweet about it if you guys want to read it. It would be pretty epic if market makers went out and sold a bunch of APE illegally on August 22nd, thinking, I'll just buy a bunch from CEO Adam in a few weeks when it's $1.50 a share at the market, right? In that, creating 43 million FTDs and being caught in an act of price fixing, which violates multiple, like 1934 Security Exchange Act, Reg Show, FINRA rules, all that. AA has the legal right to say no to any offers to buy APE due to the wording in the prospectus and filed AK, meaning since there is no authorization to buy APE except through the City Global agreement, AA could have said no to any offers by MMs as they attempted to cover the illegal shares they sold on August 22nd. Market makers sold shares they did not own a price fix. Market makers planned on buying APE at the market. No APE were released to the market. AA has said no to lowball offers from said MMs. Market makers are now caught for selling phantom shares August 22nd through October 10th and can't get AA to sell them legal shares to cover. In my opinion, not financial advice, seems like what is happening. That personally seems like what is happening to me. He said, we're going to do at the market share offering. Market makers got all giddy, thinking they were going to be able to knock AMC stock price down to $1.90 again and finally cover their shorts. Well, what happened is we had FOMO, we ran to 1090, and then suddenly 43 million FTDs, $330 million hit on APE, knocking it down to $1.40, where they thought they were going to go and buy every share from Adam Aaron, who come out and said, yeah, I don't think so. We just caught you red-handed selling shares that don't exist. That is why ComputerShare does not sell shares to the open market. Why AMC requested them not to is so market makers, institutions can't go in and buy APE at $1.50. I do believe he's going to cover this on November 8th in the earnings call. I'm super excited for it. He was a little sassy with the little Jaws photo he did earlier this week, talking about Wall Street, how someone was trying to bite his head off. In touring the Academy of Motion Pictures Museum in LA today, I came across Bruce, one of a few sharks used for the movie Jaws. Bruce wanting to take my head off felt like just another day in the office. Prior to acting in Jaws, is it possible Bruce had a career in Wall Street? And somebody had pointed out earlier, somebody retweeted that one of the head guys at Credit Suisse name is Bruce. I don't know if there's any connection, but you know, we have our fun doing those types of things. So really big deal on what's going on with APE. I don't think it's over. I don't think Adam Aron has sold like a ridiculous amount of shares. The S8 they filed was basically for their employee benefit plan. And when you guys see these, sit back, sit down, shut everything off, and go read it word for word 2 or 3 times over until you understand what's going on. The key to these things is to find keywords in here that are going to trigger your mind to go, okay, this is what they're actually talking about. Basically, don't get confused by all this front matter. This is just a cover sheet explaining who, how, where, when, and why. And then the explanatory note, information required. There's a lot of legal mumbo jumbo you can just skip over to get to the key wording, like, reserved. Can't spell today. This is like right here, just clicking that. The registration statement on Form S8 registers 77.3 million, blah, blah, blah. Registration approved an amendment to the plan to reserve 7.3 million AMC preferred equity units that may be issued under the plan. And they didn't sell any. So now everybody can stop panicking. But again, you guys, there's a lot going on here. We have the tech bubble bursting, Meta, Facebook, all that. Twitter's private now. Musk bought Twitter, took it private. My personal theory is he's going to take Twitter, Starlink, and Tesla and merge them into one company. I hope he calls it X. I'm going to buy a lot of Tesla coming up in the future, and I'm going to hold my position in AMC and APE, what I have left. I may buy more if I see any big news pop up just for a quick FOMO buy-in, but I'm comfortable with my position. If we squeeze, I'm going to make a ton of money. I'm going to quit stressing about it all the time. But there is another play I'm going to get into because I just sold another lot of property. I flipped a 5.5 acre lot out here in New Mexico and made 18 grand off at profit. Pretty proud of myself. I'm going to be taking the core of that investment and I'm going to be buying NCMI. And if you guys don't remember what NCMI is, it is National Cinema Media Company. It is a stock that AMC owns, and they own it. When they bought, they used to own it. They sold it when they got in trouble. They own it when they bought NCMI, the Bowtie Cinema Complex, the Bowtie Cinema chain. When they bought that, they got 6 million shares. Now, it's really important because I want you to look and see who the institutional holders of this company are and were, right? It's going to ring a lot of bells. If it ever loads. Oh, come on. NCMI institutional investors. We'll do Fintel. Now, NCMI is a company that does like the front matter for the movies, the advertisements, the little games, everything you see in the front matter, big time advertising firm. The key component of this is Cinemark, Regal, AMC, and multiple other theater chains own this company. It's like a company created to support the movie industry, by the movie industry, and the founders are actually theaters. I'll tell you why I'm going to get into it in a minute. It's not just because AMC acquired some, but here we go. AMC Entertainment acquired 5.9 million shares by buying out the Bowtie industry. Cinemark owns 43 million. BlackRock owns 1.3. Standard General LP is a name that you will read in some of the AMC filings, especially the ones that we just came out with, right? They own 12 million. BlackRock used to own a ton of shares. They have just unloaded 70% of their position. Now, why would BlackRock want to own this NCMI company? Why would they want to be so heavy into it? Well, if you're trying to destroy AMC theaters, the best thing to do is destroy all their investments, right? Look what they're doing to Highcroft Mine. Look what they're doing to NCMI. Look what they're doing to multiple other assets that AMC is involved with. Now that AMC is back in on this, I do believe Adam Aaron may try to buy more. So he has a more controlling interest in this company. I think it's important. So if you haven't been to the NCMI website, you should go. National Cinema Media. You can go see their earnings. They're doing much, much better coming out of the pandemic. Q2, they beat by 85% on EPS, 3.23% on revenue, and by Q4 2023, market beat has them back up positive to 14 cents per share EPS. Now, the interesting thing is they offer a dividend. I'll tell you why I'm getting into this heavy. NCMI has a 26.10% annual dividend yield. Right now, it's 3 cents a share. They brought it down from 5, but the stock is 46 cents. I believe I'm going to dump $40,000 into this stock within the next 30 days. I'm going to reinvest my dividends for 5 years. I'm going to walk away. I'm going to buy this, fire, forget, walk away, reinvest the dividends. And if I feel froggy at some point in time, maybe once in a quarter, I'll take my dividend reinvestment or annually and I'll go buy some Tesla with it. But in between that time, I expect AMC to do something very great with price action between now and Q3. We have the biggest box office of the year. Q4 is going to be huge, guys. Wakanda Forever, Avatar 2, freaking, you guys know all the movies. Q1's got John Wick 4, multiple Marvel titles coming out. This 2023 is going to be the biggest box office ever in history. And we're going to have our credit card and our popcorn. I'm holding the rest of my AMC and APE. I may buy more APE. I may buy some more AMC. I still have my $100 recurring investment with computer share for AMC, which I like. It's always buying the dip for me somehow. I'm going to keep building. I'm going to buy a bunch of National Cinema Media, and I'm going to buy some Tesla, and I'm going to sit back and relax and enjoy the ride. My dividend reinvestment on this stock alone, say this. Say if National Cinema Media, which used to trade at around $8, if it gets back anywhere to 4 to 5, not only am I making a 300% gain on my investment, moving into high earnings quarters for all movie theater chains and all movie theater industry companies coming up in the next year, but if they increase their dividend back to 5 cents, this is going to be an insane investment for me. And it's going to be completely hands off, and I'm just going to be able to go enjoy myself and do other projects like with my real estate stuff that I do. So if I put 40 grand in, let's just say this, let's say 30 grand. The return rate is 21%. We'll be conservative too, 21% annually for 5 years. And I don't think this is a dividend reinvestment calculator. I pulled up the wrong one, and my webcam froze again. Go figure. Reactivate. There was a better calculator I had. Where'd it go? Let's try the tip ranks one. Here we go. Share price. $0.46. We're gonna buy 80,000 shares. $36,000. We're going to hold it 5 years. Let's just do 3 because we know the movie this year is going to be good for movies. We'll just do 3. Expected dividend yield is we're going to do 21%, which is under what they're actually reporting. Quarterly dividend redistribution. And let's say I put in $1,000 annual. Let's say I'm okay. The stock's still low and I keep putting in $1,000 once a year. Let's do a 15% tax rate. Dividend increase, possibly, we'll say 1% per year, which is really low. Share price increase, let's do 5% a year, which is really low. And calculate. Look, I mean, this is beautiful. Look at this. End balance would be $45,000 within a 3-year period. $9,130 on annual dividend income. $9,000 a year on annual dividend income. That's just with 3 years. When you start getting up there, 5 years, you're looking at total dividend payment of $45,000 in 5 years. That's, you know, some people, that's a part-time job yearly salary annually. I planned on personally putting $40,000 in, 21% yield, $1,000 contribution. My tax rate actually would only be 10% because I don't actually claim. There's different types of income, like my military disability income doesn't actually count. So, I mean, this is going to be a beautiful investment. I'm really excited about it. That's with a share price of 46 cents. It's going to pay off pretty good. I'm just going to sit back and collect that money and relax, make my other plays on the side, watch NCMI earnings like a hawk, make sure there's no bad news coming out. They do have $1 billion in debt, but it's not necessarily bad because they experienced what the theaters experienced during the pandemic. They got screwed too. But now you have companies like BlackRock that are bailing out of this meme stock. Credit Suisse, BlackRock, all getting crushed. They're bailing out. Eventually, they're going to get margin called. They're going to have to cover their shorts, and we're going to see price action. Let me get to some comments on here. I want to see what your guys' thoughts are. What's up, apes? Doge. I like Doge. I'm going to get back in probably in the next 6 months. I'm watching the SEC stuff to make sure what regulations are going to come out. Because I hate to tell you guys, if they come out with really harsh regulations, a lot of crypto coins could absolutely be banned. I mean, just taken away and banned, but we'll see. I'm always a big fan of Doge. I think when Musk gets X up and running, the all-in-one app, Doge is going to be the main currency on it, and you're going to see some good price action on Doge. Miss Harris, good morning, beautiful people. Gorgeous Saturday. It is beautiful. I'm hoping my numbers on the stream are low because everybody's out enjoying themselves. Is Meta still good to short to make money? I can't tell you that, man. I think Meta's an absolute dumpster fire. Facebook is over. Facebook is so lame and boring and just dry. Unless Zuckerberg comes out and gets off his high horse and stops being an incredible douche and rebrands Facebook, not just in name, but the Facebook platform needs to evolve. It needs better visuals. It needs better mechanics. All the weird ads need to be taken off of it. Facebook needs to evolve and be a better platform. It's too old and boring now. So the ad revenue, they're getting crushed on. He thought that Oculus and Meta Oculus Quest was going to be the biggest thing since sliced bread. It is cool. It's fun. But people are so disgusted with Facebook because all these billionaire tech industry guys got up so high on their high horses thinking that they're going to ban certain people for this and this. You know, when they banned most of, like, you could not be conservative from 2016 to 2020. You weren't allowed, or I'm sorry, the 2020 election to now, you're not allowed to be conservative on social media platforms. So you're taking half of the country and saying, no, you can't say what you want to say. People are bouncing out. They're going to other platforms. And now we have Twitter, Kanye's buying Parler, and Trump is starting Truth Social. And people are going to bounce off of Facebook and they're going to lose a ton of revenue. So Facebook could still be a good short. I'm not going to tell you to go short anything because it's extremely dangerous if you don't know what you're doing. But let's just check the chart. The best thing to do would be to check their earnings and see if they're actually doing good or not. Do they have any plans to fix their poor performance? But let's just check the daily and see where they're sitting. So they are actually below the pandemic. See, this is dangerous. They're actually below the pandemic crash, right? The lowest, they're way below that. So if you get into short Facebook now, you could get crushed on market makers and institutions just trying to jump it back up for a 10, 20% gain. I mean, it doesn't look good. It looks like it's in complete free fall. But if Facebook comes out and rebrands and Zuckerberg quits trying to be the head man, Zuckerberg steps back, brings somebody new in that's fresh and actually is not like a complete robot, then they could rebrand Facebook and Facebook could start doing good again. If Facebook came out, rebranded the platform, made it look more fluid, more nice, and actually started doing ad revenue sharing on Facebook, then they could make a lot of money. The users would make money and this could come back. It could recover back to these levels. So got to be careful on that one. Good morning. Or Facebook could get bought out. That's also a possibility. Did the A filing slap that like button? Thank you, Miss Harris. Seems right. Not one share of APE did I ever sell. Congratulations. Come on now. Fixing something real quick. So I do think Q3 we're going to see an answer on APE. I think Adam Aaron's tweet is basically him saying, hey, I'm out here now. I can finally start talking again, whatever the 60-day thing is. I think the 60-day thing was probably because they had some type of litigation going on or some type of legal challenge against the NYSE or the DTCC, which is going to be a very good thing. Let's see here. I bought more APE than double what I got after a split. JP, sell. What is sell? Can you explain this to me? JP, November 8th. We're going to do a live stream on November 8th. Terrible's going to host a space call. I'm going to be co-host, streaming live. It's going to be big. We're going to kick it out to everybody. First space call after Musk bought Twitter. So we're hoping there's not going to be any crazy succession. Fair play. You know your stuff, Spence. Thank you, man. Appreciate it. Yeah, NCMI is going to be my cash cow moving forward. I'm going to use dividend reinvestment to keep increasing as long as NCMI's earnings and revenues keep moving forward. The chart to me looks like it's getting ready to start to recover. Let's go check the RSI. I know it's in here somewhere. There it is. Look at that. RSI on the daily is still sitting down at bottom, right? I think NCMI is getting ready to reverse. I don't see any real bad news coming out. There's no talk of bankruptcy. Their earnings are coming back strong. They're looking positive EPS by Q4 2023, meaning there's a lot of upside here, even if it's back to $3. That's a couple 100%. I'm getting in and I'm going to hold and fire and forget. I'm going to buy it and forget. A lot of people talking about GME lately, talking about a big breakout coming in. I might grab a couple shares Monday, play it for a swing play. I'm not a diehard HODL GME guy. I do like GME. I go to GameStop all the time though. But if I got a chance to make some money, I'm going to take it. Let's see comments. Yeah, AMC could definitely still squeeze. I thought AMC was going to finish under 6 yesterday. I thought it was so easy to wash and rinse stock at easy money. Yeah, the first time in like the past 7 months, we actually closed above max pain, which blew my mind. We closed a penny above max pain on AMC, which is extremely bullish for next week. Now, I did come out and say I thought 250 or below for this last week, so I called that, and I thought we were going to hit 599, which we almost did. So you could have swung it if you're not being a total jackass and listening to what I'm saying instead of just trying to say I'm wrong. Because AMC did drop down to, come on, chart, let's go, 636. If you were listening to me, you could have been like, oh, hey, look, Spence's chart's up. He's talking about a $6 price range. We tapped 636 twice where they did try to get it below 6. You could have bought in and made 3 to 5% immediately. And next week, I think we're going to take right off because we did close above max pain by 1 penny. We closed above Hoyles and max pain, which is extremely rare. Meaning, if people exercise those 18 to 20,000 call options that landed in the money, you're going to see some price action. Possibly back up to the 678 range, and definitely on APE, you're going to see 250 again. So if you did buy the dip because you were listening to me telling you the price was going to go down, you would have just made money. But too many people are like, you didn't get your price target exactly right to the penny. I never said I was going to be right all the time. I was just telling you this last week, and if you watch my past videos, I called last week perfectly. I told you. 250 the week before too. I said APE is going to try to test $3. We got to like 287. People could have made some money on that. Then I told you we were going to go down this last week, even though all the other YouTubers were crying $100 a share. I said, no, we're probably going to hit 250 and hang around that level. And then I told you AMC was going to go under 650. We closed at 651. You could have bought the dip. You could have made some money. And if you didn't, it's because you're more worried about clout chasing and talking shit on Twitter and YouTube than you are about making money, which is a waste of my time. I have my AMC coat 54 cost average coat, average down, high tech, Josh Ham, Dogecoin and Shiba. I like both of those cryptos, man. I'm just waiting on this regulatory stuff to be done. Moscato, nothing to do with being conservative and everything to do with hate speech. That's absolutely stupid. You're banned from the channel. We're not doing that here. It's absolutely dumb to come in and say that Facebook did not actually restrict conservative speech. It's nothing to do with hate speech. That type of comment is absolutely ignorant, and we're not playing that game, especially on my channel. So you are gone, sir. Sorry. That's just what it is. I'm not going to sit here and listen to liars. Okay, moving forward back to stocks. I think that's it, guys. So we went over the S8 registration statement. Then we went over my thoughts on what's actually going on with APE, which wasn't too far off what I initially predicted. You can go and read the tweet here. Oh, no, that's NCMI. That's my dividend play that I want to do, which I'm going to do in the next 30 days. You can go read my tweet here on the stuff. You need to put fabric currents and maybe some foam in the room to help. Yeah, so guys, the reason it's all echoey and everything's off my walls is because I'm moving in like 4 days. Sorry about that. I'm moving in 4 days. No, delayed noise. Thank you. Everything's off the walls. I don't have any carpet in here. It's all echoey and reverby because I'll be moving. I'm signing for the house Monday, getting out of the apartment. I'm done wasting money in an apartment. When it was cheap, it was great because I didn't have any maintenance costs and I had my other homes in Michigan and whatnot. But I'm moving. I finally got a house here. Good news is I get to refi for free in 9 months, which I believe. And if you're getting into housing, let me tell you, it looks like by January, they're going to only do a 25% rate hike increase, meaning by the end of 2024, you're looking at interest rates coming back down 4 to 5%, because I do believe conservatives are probably going to sweep the Senate and the House. That's just my opinion. I don't care what political side you are, but when they do, they're going to kick back and start producing more fuel, which means fuel prices come down. Inflation, which I believe is fake. I think this inflation is manufactured. When fuel prices come down, transit comes down, food comes down, everything comes down. So if Disney did buy AMC, it would make all of us a bunch of money. Yeah, the Disney thing, I'm telling you, I still think it's going to be a big thing. So I think Disney definitely has some type of joint venture. Don't let keyboard warriors get you, bro. Anytime I have a chance, they do. Yeah, I know, Muskie. It's so dumb. That's why I cannot wait for Musk to force everybody to verify on Twitter. I think every single account on social media should be verified. That way, other countries can't come into our social media platforms and force trends and viral sensationalism that may not be in the best interest of, say, Americans or Canadians. You don't want foreign countries invading your social media, telling you what to think and feel. And I'm telling you, social media is a very powerful, dangerous tool. So, Urban Ape, you're doing what Facebook is doing. No, I'm actually not. I'm just not going to. I'm not going to allow people to come in and make blanket statements on one side is hateful and one side is not. It's completely different. Facebook is banning certain people specifically because of their religious or political thoughts. Me, when people come in and say, no, conservatives are just hate speech, that's literally fascism. That is a direct violation to the definition of the word democracy. You need left and right. You need to be able to negotiate between those two. That's why I told everybody this year, if you don't know who to vote for, just don't vote for the person that's been sitting in Congress for 40 years that's not trying to fix the stock market. Like, left or right, it doesn't matter. It does not matter. You guys, if you're still playing that game, you are the sheep. You need to understand the left doesn't care about you and the right doesn't care about you. And I'm telling everybody, if you really want to make a change in Congress, go in and vote for the random new person. Don't vote for the person that's been in for 40 years. So Doge, AMC channel buy and hold. Look, man, everybody's been screaming buy and hodl for 2 years. It's got us absolutely nowhere. If you haven't noticed, the stock price is in the dirt. Nobody's making money. If we've been buying and hodling, you've missed out on rips of over 100% multiple times. So I'm not going to tell everybody to buy and hodl. I think that is honestly something that probably worked back when stocks first ran like this, because market makers weren't prepared for it. We've given them 2 years to crush us, and buy and hodl doesn't work anymore, because if they are selling phantom shares in the open market, all you're doing is buying synthetic shares, diluting your stock price, and then you're holding those phantom shares, which we're not going to make any money on them until Adam Aaron issues new shares so they can fulfill the buying pressure. That's why the share offerings made the price spike. If you're going to buy and hodl, the only right way to do it is to buy your shares through ComputerShare, because you are 100% guaranteed to get a legal registered share of AMC, which you're pulling off the market away from the DTCC, and in fact, possibly closing a phantom share and a naked short. That's the only way, man. So anyways, that's all I had for you guys today. Obviously, if you're waiting for a squeeze, you're going to hodl. If you're waiting for a squeeze, you're going to buy more. I get it. I totally get it. But that type of thought process, being closed-minded, this is the only way is buy and hodl, is what took us from 72 down to 9 again. And I'm telling you, people got to start waking up. And what I'm doing, and this is my word from here on, this is what I'm doing, is I have my core position. I'm not getting rid of it. I'm going to leave that there. But if I see an opportunity to buy more AMC or APE for a swing, I'm going to swing it, and I'm going to take that money and I'm going to pull the dry powder in. My core position will sit there. I'll swing play AMC, GME, APE, make money on the side while my NCMI is building dividends, and I'm going to start building my own MOAS. If you swing shares of APE and AMC, you're not taking money out of the play. You're taking it away from the market makers. Everybody's got to wake up and start getting smarter. If you think buying some stock, holding it, and sitting on your couch is going to cause a squeeze, you have been extremely misled. I'm not telling you got to do any fancy options or nothing like that. But if you see a 10, 20, 30% run and you just bought some shares, take some profit, keep your core position, and wait for the next dip to buy back in. Look at this. Look at what people could have made if we weren't fed buy and hodl. 72 sold, bought back in at 18, or what had been 20 because of the split. Then we went up to 31, sold, bought back in at 9, 31, 21, sold, bought back in at 9. Fucking 17 sold, bought back in at 9. You guys could have already had a MOAS if people would have been making trades on this stock through time. It's just crazy to think that. You can hate me if you want for saying it. I don't care anymore. The people that are going to buy and hodl till 500K, you are absolutely going to be bag holding for the rest of your life. So I'm keeping my core for any squeeze opportunities. On the side, I will be playing swings on AMC, APE, GME, etc. while I'm holding my NCMI and I'm holding my Tesla. I'm going long on Tesla, long on NCMI for long holds, because I know the price value increase is going to be there, plus the dividend for NCMI. In the meantime, I'm going to play against the market makers' corruption because I know how they work. I'm going to play against their corruption on these swings, and I'm going to make money until MOAS. Bottom line, if we would have been making money this entire time off of these swings as retail, it would have been taking it from the market makers. Bottom line. So anyways, yes, DRS. If you just want to buy and hodl because you don't know how to swing trade, you're not comfortable with it, direct registration with ComputerShare is the absolute best way, because in fact, when you do it, you are pulling your shares off the market and you are restricting anyone from loaning or shorting those shares, which helps the entire play. But if you're just buying, hodling, and Robinhood and Webull and all these other shady brokers, you're hurting everybody, because you're buying phantom shares and then those brokers are lending those phantom shares out. So now you're doubling up selling pressure on the stock. Anyways, you guys have a great Saturday, man. I'm going to go finish my coffee, finish packing up. I might be offline for 4 or 5 days while I'm moving, but I will be setting up my new office in my house and everything. I'm not going to have all like neon lights and all that garbage all these other YouTube douchebags have. I'm just going to have my same old thing with my movie stuff and my video games in the back. So you guys have a great weekend, man. Thanks for coming. Please like, sub. Miss Harris, again, thank you for coming in and moderating. You are wonderful. All my mods are wonderful. And thank